Deal flow. And some of you may have never heard that term, but if you're in real estate, deal flow is simply the amount of deals you're looking at. So if you're an investor, you're obviously you want to look at more deals and be able to have more choices, right? If I go to sit down at a restaurant, I don't want a menu that's limited to only a few things. I want a menu with all types of dishes, several different things to choose from. That's what deal flow is. What you'll see when you're trying to invest, though, it's very difficult to achieve any real level of deal flow. So we find investors who they'll find a sponsor who is a mobile home park sponsor. And so his deal flow, depending on where he's at in his career, he may only buy one or two, maybe three deals a year. That's a pretty good pace. If you bought a mobile home park every 3 to 4 months, that's a pretty good pace. But deal flow um, is so important to investors like us, alternative investors, is we need to be able to make comparisons. We need to be able to look at several different apartment buildings or several different self-storage facility deals and see how these different sponsors are managing their deals. And you may just see that one is a better purchase than the other. I mean, that's obviously a big difference. Sometimes you'll have a just an operator who has his own way of sourcing deals. He doesn't use brokers. Maybe he goes directly to the seller. And for that reason, his deals are being bought at a better price. You wouldn't know that unless you'd seen two or three different operators and seen their numbers. So that's another advantage to having deal flow. Um, the comparisons, you love to be able to compare. Now, it's not just deal flow of one asset class, but we want to see mobile home parks. We want to see self storage facilities. I want to see private businesses and oil and gas deals and be able to compare those. So we're trying to look at as much deal flow as possible in order to pick out the absolute best ones. And I'm going to be really honest with you, it is very hard to do. That's why I created smartainvestors.com, is because I'm already doing this for myself and a few other people. So I just figured I would go ahead and see if other people wanted to join us on this journey. I have developed over the past 20 years, really the past 10 to 15, relationships across several industries. And I have joined masterminds and I've gone to conferences for retail investors. I spent a lot of money learning how to do this stuff and a lot of money to build the relationships and groom the relationships and meet people face to face. And I'm just going to be honest with you, most individual investors can't do that. You probably have a job or you have a way of bringing income into your family, and that's your way of making your living, and you don't have time to do the level of due diligence and the level of relationship building that I've done over the years. So that's why deal flow is important, but I'll tell you, it's almost impossible for the average investor to achieve. And this, we're going to go deep into deal flow. Another reason why deal flow is important, because as an investor, you need to learn how to vet these deals. Okay. If you're going it on your own and you're going to go look for the best apartment building investors or the best sponsors and mobile home parks, if you're going to do that, you need to learn what a good one and a bad one looks like. So if you just jump on the first one you see, which I've heard story after story, these over the next year, you're going to hear many similar stories where people were sucked into a webinar online on Facebook and they didn't know any better. They didn't know how many different sponsors are out there. And I'm not saying that they're all bad. Most of these sponsors, all of these sponsors, nobody went into these deals thinking they were going to be causing problems or that these deals were going to go sideways. They just didn't have the level of experience that you need to have. If you weren't around in 2008, you don't know how painful it was to watch people hand the keys back to the bank or watch the bank take the keys out of your hands. That happened. And it happened for different reasons in 2008 and 2009. And it's happening for different reasons in 2023 and 2024. And I think it'll continue into the future. But I like sponsors, certain types of sponsors, and we can talk about that later. But if you've only seen one or two deals, you don't know what a good deal looks like yet. You're kidding yourself. If you jump on the first thing that comes along, you may get lucky and it may be a great deal, or it may not be. So you've got to learn how to do due diligence. The Smart A method helps to map that out, but there are just a lot of different questions you have to ask. I have resources on the questions you should be asking sponsors that'll help you, and that's great. And if you choose to go by yourself, I hope you use my resources, take them, and go find the great deals. I just like helping investors, and if that's ever of any interest to you, I want you to reach out and talk to me about possibly joining my group of investors. Risk management. So we talk about risk as part of the Smart A method, but the more deals you see, obviously that's going to reduce your risk. And only seeing a few deals increases your risk. It's just a matter of numbers. So risk management's part of the deal flow. Honestly, I see so many deals it's hard to choose, but I have my stand firm things and how long a sponsor's been in the business, how many deals they've taken full cycle. There's certain things that I key in on, but not everybody is the same way. But that helps me with risk management. The more deals I see, the less risk. We mitigate risk that way. And this is not this. This is a one part of deal flow, which means if you have a lot of money to move off the stock market, some of you guys have way too much money in the stock market. And let's say that you've got a $2 million account and $2 million, and that's the majority of your retirement account, and it's sitting on Wall Street. Well, I'm not going to stop preaching this. You need to get half of that off of Wall Street. At least half of that money needs to be away from Wall Street. So in this day and time, I truly feel that if you're 100% invested on Wall Street, you're ignoring some major warning signs. Anyway, let's say that you've got $1 million that you need to move into alternatives. Deal flow will help you move it into alternatives faster. Now, that doesn't mean you're going to jump on every deal you're going to see, but the more deals that are coming along, if I can show you, my goal is to show you 8 to 10, maybe even 12 deals over the next year. The investors in my program, if I can show them a deal every month, it wouldn't take long to diversify $1 million into 10 different deals, 100,000 each deal. And that's a really diversified fund. I would put that person in a few apartment buildings, a few mobile home parks, a few self-storage facilities. I would have some oil and gas and maybe some private equity deals and businesses. We might do a little bit of medical office. You would diversify. So deal flow allows you to diversify. Not everybody can relate to having that much money to put into investments, but that is a huge reason why deal flow is important. So I didn't start out with this, but deal flow is one of the 3 pillars that I think every investor needs to understand before they start investing in alternatives. And deal flow is number 1 on that list. It is very, very difficult to generate the amount of deal flow that you need in order to accomplish everything I've just talked about, in order to get all the options, to not have the limited menu, to be able to compare apples to apples, look at 2 apartment deals side by side and see, why is this one throwing off 16% and this one's only projecting 13%. You have to be able to practice your due diligence and know what questions to ask on each of these assets. I didn't even talk about higher returns, but obviously when you're comparing 2 deals and one of them you're going to be able to pick and choose the ones that have the higher returns, right? Risk management is another one, and being able to place larger amounts of money faster and truly diversify those assets faster. So again, deal flow is critically important if you're thinking about getting into alternative assets. The Smart A Investors, Hickory Creek Smart 100 Fund is a group of investors where I pretty much do that for them. I bring them the deal flow. In order to bring them 10 to 12 deals a year, my team is looking at hundreds of deals. We break down, we'll look down at 10 to 12 deals a month to get one good one that we want to bring to the table. And it's all about timing as well. Some of the best deals don't come till later in the year when people get better deals due to the calendar running out on people. You've got 1031 exchanges, a lot of different things, but deal flow is critically important. And I want you to know that it's one of the 3 pillars to investing in alternative investments. I truly hope this video helped you to understand better what deal flow is.